In this profitability series, I'm going to be discussing on a very important aspect of how you can consistently make profit from the forex market. And it's important that you understand that profitability is not just dependent only on your strategy, your trading system, or your risk management. There are a lot of other things that are considered. The purpose of a trading system or you having a strategy is for you to have a defined procedure, a set of process that will lead you into identifying in the market an area of interest. And this area of interest can be identified using varied different methods of analyzing the market. You have several under technical analysis and also incorporating fundamental analysis. But the most important thing is that your trading system, your strategy should be able to enable you identify a very important area on the chart, an area of interest, which can be your support or resistance, which can be your trend lines, which can be demand and supply. I trade institutional trading system that's a hybrid of both technical and fundamental analysis. But in this video, I'm going to be showing you my specific entry and exit models, looking at one of the trading opportunities we identified in the market using demand and supply. And right here, you can see on the chart, this is a 4-hour time frame. I basically use 4-hour time frames to identify trading opportunities, my areas of interest in the market. In this case, this is a demand zone. You can see that this market is making higher highs and higher lows after changing structure at the break of this level here. We have a change of character. The market has started making higher highs and higher lows, as you can see here. High, low, and then we expect it to push higher. Of course, there is a supply zone lying right there. Okay, and we're going to look at this. I'll do a playback, and then we'll see how this works. So this is a demand zone which I identified here. And of course, I'm going to be taking two methods really here. Is either you do a pending order, in this case where the price is still up, trying to get to the demand zone. Okay, put a pending order, and that pending order is the buy limit at 1.33606, as you can see on the chart, and the stop loss slightly below the distal end of the demand zone at 1.33174. Okay, so this trade can be set at this pending order and markets can move. So the other way is using a model which I'm going to be demonstrating, using the white curve theory. From here, I move straight to the 5 minutes time frame. I can go to 15 minutes, but I chose in this case to go to the 5 minutes time frame to see what I'm talking about here. You can see as the price descended into the demand zone, this is the 4-hour demand zone that we showed in the 4-hour time frame, and price is making higher higher lows and lower lows descending into the demand zone. So we're going to look for a break of structure, a shift in the market character here, and this is exactly what happened. Price making low, this is a low, this is a high. It came here and then pushes up. So let's play out and see what happens. What this the price basically is moving. You can see after it had hit that break of change of character, we identify a supply zone. Sorry, we identify a demand zone. You can see this red candle here exactly at this point. So this is a supply demand zone within this is 5 minutes demand zone within the 4-hour demand zone. So let's continue the play out and see this time. Price has hit this entry. This is another entry. Price has hit into that 5 minute demand zone, and we're gonna play it right out and see what happens. Watch. This requires a lot of patience. It can look as if it is going to come back down into the zone, but this is it. Our targets at this instant, you can see market price came back into the zone after it had, made some good profits. So where is our target? Our overall target is the high, the 4 hour. Let's go back to the 4 hour. This is our target, which is this previous high into the supply zone. That is where our target is. So we're going to play this in back, move back to 15 minutes, to 5 minutes. So let's continue to do the playback. A lot of patience is required. Wow, the move has started. This is huge. What this? Let me move it to 15 minutes time frame. Okay, where it can visibility. Okay, the visibility is more here. You can see the move. It was huge, and then there's a correction. The 4 hour time frame, our target has been hit. So easy. Let me explain it again. It is like this. If you have a demand zone here, call this a demand zone. So market price, we expect price has moved away. So let's see this market push, make it high, and then it gave us a demand zone here, broke structure. Okay, so the whole of this is a demand zone, and we are waiting for price to retest this demand zone. I'm not going to talk into details about how to identify very valid demand zones. You can go and watch my videos on all of that. But here we are looking at getting very good sniper entry on this place at the proximal end, and our target to be the high. You look for your SL, your stop loss level should be 10 pips or 5 pips below the distal end of the demand zone. That's exactly what I demonstrated there. So the expectation is for price to, gradually retrace for the first time into this demand zone. So when this happens, you move your time frame from 4 hours to either 15 minutes or 5 minutes time frame. Okay, and in that time frame, so move into 5 minutes time frame, what you're going to watch is all of these moves. Okay, you are watching all of these moves. Price consistently can actually draw a trend line here, a downtrend line here, and watch for price to move, break the high here, this high, break it, forming a change of character, a shift in market structure, which is an indication of the bullish intent. Okay, and then return into this zone around this area, whatever little demand zone that is formed there, price comes to tag into that zone and then pushes straight to your target. So you can have a smaller demand in the lower time frame formed here within the 4 hour demand zone. Price breaks this structure, giving us a shift in market structure, what they call change of character, right? Okay, and then returns into this place. That is a time for you to enter the market. You can actually enter a penny order the moment that price has done this shift. You see this is an overall uptrend. Market is trending upwards overall. Okay, and within this structure here, there is a retracement which looks like a downtrending market. We will look and observe the highs and the lows and know when there is a shift in the structure. So that shift in the structure from bearish to bullish is a bullish intent. Then you identify a demand zone that is left here and wait for price to tap it in and straight up. So here will be this high, will be your target, although markets might move further up, but to be safe, it should be your target, and about 10 pips lower than the distal end of the demand zone should be where you place your stop loss. If you follow this model, you will not be knocked, out of the market prematurely. Okay, so this is where we come to a wrap up on this video. I will see you again in our next profitability series.